So guys, welcome to Unison's weekly fundamental analysis. So first of all, as usual, let's look at the euro. So as federal officials have been playing down inflationary pressure before, the US dollar index fell to 89.853, a new low since 8th of January, while the euro against the US dollar hit a high of 1.2266, a new high since January of 8. But in a dovish speech by ECB officials, etc., after the influence of multiple factors, the market reversed. Moreover, the USPC data far exceeds the Fed's 2% target, which also supports the US dollar. Schnabel, the executive committee member of the European Central Bank, this week downplayed concerns about borrowing costs and refuted calls from conservative policymakers to reduce debt purchases. He called reducing the balance sheet or gradually reducing the 1.85 trillion euro pandemic and emergency asset purchases. The idea of the plan PPP is not in line with the central bank's goals. She said, we must always be willing to increase or decrease the scale of asset purchases to make it in line with our commitment to maintaining a favorable financing environment in the Eurozone. Economy recovery still depends on continuous policy support. Premature withdrawal of fiscal or monetary support will be an issue. A huge mistake, a large part of the economy is still in emergency mode. Alright, coming up next, let's look at the pound. Although the US dollar bottomed out this week and rebounded, the British pound continued its gains, closing at 1.4188, a weekly rise of 0.27%, which was the fourth consecutive week of gains. It was mainly supported by the hawkish speeches of officials from the Bank of England. Jurgen, a member of the Bank of England Monetary Policy Committee, said on Thursday that if the job market rebounds faster than expected, the Bank of England may raise the interest rates in the first half of next year at the earliest, but it is more likely to wait until later in 2022. This is followed by the clearest statement about when the Bank of England may begin to reverse the stimulus measures during the epidemic. After freaks thought, the British pound strengthened against the dollar and the euro, and British government bonds yields rose. So Friedrich said that he generally agrees with the Bank of England forecast earlier this month that this year's growth rate of 7.25%, but he believes that the unemployment rate may be higher than the forecast after the government employment subsidy program ends on 30th of September. Alright, next let's look at the Japanese yen. So the Japanese government lowered its economy forecast for the first time in 3 months on the grounds that emergency measures to prevent the epidemic have caused new weakness in personal consumption and business conditions. Win Thin, head of global currency strategy at Brown Brothers Harriman, said that the yen may be underperformed due to the deterioration of Japan's economic outlook. Japan is expected to extend the anti-epidemic emergency restrictions, which increases the possibility of the central bank extending the package of measures that expire in September. These measures are designed to alleviate the economic impact of the epidemic crisis. So the Bank of Japan officials, including Governor Haruhiko Kuroda, have repeatedly stated that if necessary, the central bank will consider extending the current anti-epidemic rescue plan through September. Japan is dealing with the rebound of the epidemic that has plagued its economy. The Nikkei reported on Friday that the Bank of Japan may decide to postpone as early as June's interest rate assessment. At the same time, the Japanese government hopes to extend the restrictions for 3 weeks. This casts a shadow over Japan's fragile economic recovery prospects. Daiwa Securities chief market analyst Masayoshi Iwashita said, ideally, the Bank of Japan will spend more time carefully studying whether it needs to make some adjustment when extending measures to deal with changes in the impact of epidemic on corporate financing. But if the Bank of Japan if want to act quickly to show that it is working with the government to fight the epidemic, it is likely that these measures will be extended in June. Alright, so coming up next, so let's look at the forex calendar for next week. So as usual, for friends who are going to trade, remember to put your stop loss, and also for next Friday is the NFP. So remember that the market will be more volatile. Right? So that's all for today. Thanks for watching.